All right. Well, thank you very much, and welcome back to another edition of our Liftoff webinar series as we kick off the fall session, if you will, in 2022. Took a little bit of time off in the summer, but welcome back. And as Monty Python would say, we're in for something completely different today. Normally, we're coming at you with some of our technology projects or even some of our talent projects, but today we are happy to welcome Imperial Capital, one of our Lift members, to talk to us about financial market trends and opportunities across the manufacturing industry and the supply chain. So thank you very much for taking time to join us today. My name is Joe Steele. I'm the Senior Director of Communications and Legislative Affairs here with Lift. Appreciate all of you taking time out of your day, your afternoon, your morning, wherever you happen to be around the country, to join us today. A few housekeeping items to take care of. Everyone should be muted, but if you're not, please go ahead and make sure that you are. We are recording this session, so we want to make sure that we eliminate as much background noise as we can for the recorded version that we will post on our website at lift.technology a little bit later on today. We will have that posted so you can share it with folks who may or may not have been able to join us today, that you think may be interested, or something you want to revisit as part of the presentation as well. We will host a Q&A session afterwards, so please use the Zoom toolbar that we're all very familiar with these days. Try to avoid using the chat function, use the Q&A function instead, and we will facilitate that Q&A afterwards, after the presentations, to entertain all of those questions. I do want to go through and explain a little bit about Lift before we get started, for those who do not know who we are and what we do. Lift is a nonprofit public-private partnership between industry, academia, and government, and one of 16 national manufacturing innovation institutes around the country. So as a nonprofit public-private partnership, our mission is to drive American manufacturing into the future through technology and talent development. We all believe that the future of our national economy and national security rests on advanced manufacturing. And we want to make sure that the next region, the region that tackles that first, the region that masters that first, is the U.S. So we can move forward and secure our national economy and be secure in our national security as well. So in terms of our where we live from a technology point of view at the intersection of material science, manufacturing process, and systems engineering. And then we have the talent development that falls underneath all of those. So at Lift, we really operate two business units, if you will. The technology program, which is leading innovations for tomorrow, and the talent program, which is learning innovations for tomorrow. A little bit about the technology program. I'll touch on both of those. All of our technology projects fall under one of these pillars of technology. A little bit deeper here. I know we're not getting deep into advanced manufacturing technology today, but all of our programs live somewhere in these four pillars, all the way from, you'll see the digital side at integrated computational materials engineering, through to advanced alloy process development, to multi-material joining, and agile and smarter manufacturing. So there you see the connection between materials research, manufacturing processes, and systems engineering, making sure that we're looking at things holistically, so that whatever component we are designing, whatever component we're trying to accelerate towards commercialization, is fit for purpose and ready to go at the end of the day. So that is where we live from the technology point of view. On the talent side of the house, it's still about innovation. It's still about unique ways of doing things, but really this is now about creating new tools and new pathways for students, really of all ages, to look at advanced manufacturing as a potential career choice. And that really starts at our Lift Learning Lab. It is in our Detroit facility. That is where we kind of test out programs and projects and curriculum, and bring teachers and students together to see, along with industry, to see what we need to be teaching to make sure that that talent pipeline is ready to tackle some of these new innovations that are coming out of our institute and coming out of our ecosystem moving forward. And so we moved that into our Ignite Mastering Manufacturing curriculum, which is a high school curriculum, 3-year program for high school students. It's available to about 3,500 students actually right now today are participating in it around 14 states to really become exposed to the world of advanced manufacturing. What does that look like in the year 2022? And how can they move into that career, whether it's moving directly into the workforce or going on to secondary education after high school. We also provide opportunities for our more mature adult learners, folks who are looking for a new skill, looking to upskill. We offer certification opportunities in CNC, welding, robotics, industrial technology, and maintenance. Really offer that in 2 different ways. The first is in our own LIFT certified programs that we offer at our LIFT Learning Lab here in Detroit. These are nationally recognized, industry recognized credentials through either the National Institute of Metalworking Skills or the American Welding Society or SACA on the robotics side, giving people an opportunity to earn a advanced manufacturing credential so they can go ahead and get a job immediately. We also offer this program to some of our service members around the country as a way to give back. As a Department of Defense supported Manufacturing Innovation Institute, we wanted to give back to our service members and their families. So we offer Operation Next. It is available in about 10 places around the country to active duty service members right before they separate from the service. They've, given their 4 or 5, 8 years, whatever it happens to be, looking to begin their civilian career, wanted to give them an opportunity to earn an advanced manufacturing credential that is nationally portable, industry recognized in those same 4 majors. So we offer it to them. We also offer it to the Guard and Reserve. Those folks are often forgotten, members of the service. We want to offer the opportunity to them. Maybe they want to learn a new skill. Maybe they need to upskill. Maybe they've been, participating in one of these programs and have a career in one of these programs, but just don't have the credential to move forward. So we offer them that opportunity as well. And importantly, this program is available to their spouses and family members. So we want to give back to those military families who have sacrificed so much for our country. So you can learn more about that on our website as well. I mentioned we are a nonprofit public-private partnership. We're also a membership-based organization. So we thank Imperial Capital for being a member, along with the rest of our members, including some of you on the line here today, or some of you watching this recording. So what do folks receive as a LIFT member? Well, they take advantage of what we call the LIFT Advantage, which are the items you see on the screen here. We are a trusted advisor, not really, selling a specific product or service, but really trying to use our expertise and the expertise of our ecosystem to point people in the right direction to move forward and move their manufacturing capabilities into the 21st century or even beyond. We're a technology accelerator, as mentioned, trying to take these technology concepts from idea and prototype to commercialization across that valley of death so they can be used by industry and the warfighter as quickly as possible. We're a technology showcase. I invite you to come visit our Detroit facility. If you have not done so, please come on by and visit. We have a number of events actually coming up in person. Finally getting back to bringing big groups to our Detroit facility this fall. So please take a look at our website or sign up for our emails to join that. Be happy to have you, starting actually with Manufacturing Day, the beginning of October here. We're a connector and a convener, bringing the brightest and best minds together. So thank you very much for joining us today to learn from Kevin and the other folks at Imperial Capital, but also from the rest of our membership. We're a talent developer, as we talked about, trying to provide opportunities to students across the education continuum, from high school students, even sometimes below that. Middle school and early K-12 students come through and see what advanced manufacturing is, all the way through incumbent workers and to our soon-to-be veterans and Guard and Reserve members. And finally, we're a government partner. It can be tricky to work with the federal government. It's a big place, can be bureaucratic, but we try to be that conduit, particularly for small to medium-sized enterprises, to be able to work with the federal government, take some of those ideas that they are developing and move them forward into into the DoD and other places of the federal government. So that is where we are at Lyft. Encourage you to join us and take a look at what we have going on. Give us a call, shoot us an email, visit us on our website, follow us on our social channels to see what we've got going on. We'd be happy to speak with you about membership and how we might be able to help. But that is Lyft in a nutshell. In the meantime, I'm gonna stop sharing my screen to bring on Kevin from Imperial Capital to talk a little bit about the supply chain and some of the marketplace, the finances in the marketplace he's going to speak to. So Kevin, you want to go ahead and share your screen? The show is yours.
Great. Yeah, just bear with me while I pull this up, everybody. And thanks, Joe, and thanks, Lyft, for allowing me to present to some of your membership here. I will take you through a presentation, and I think we're going to have some Q&A at the end, so I look forward to getting some of your questions. But let me just start here by flipping through this. A little bit about Imperial, and I'll get to this, but I focus specifically on the advanced manufacturing and supply chain sector. But we as a firm, we are a mid-sized investment bank. You can see that we've got a global presence. We've got offices in the US as well as Europe, as well as Israel. And we're full service. We offer investment banking, sales and trading, as well as research. This shows some of the services in investment banking that we offer. You can see, broadly speaking, we help companies raise capital either through the public markets or private markets, both debt or equity. We do a lot of work in mergers and acquisitions, particularly advising companies looking to sell, but we can also do work on for those looking to purchase. And then we also do some other work around fairness opinions and restructuring. You can see below the sectors that we cover. I highlighted the ones that overlap with my practice. Probably first and foremost, advanced manufacturing and supply chain, which I'll describe how we look at that universe. But then we overlap. I do quite a bit of work with companies that are in the aerospace and defense and space area, as well as some medical, more on probably the contract manufacturing side, industrials, and then also technology. In terms of my background, I'm a lifelong investment banker. I've been working in the industry over 25 years. You can see some of the places I've worked, as well as education. I've been at Imperial Capital close to 9 years. I lead up our industrial group, and then within that, I really primarily focus on advanced manufacturing and supply chain. You'll see that I participate in a lot of events like this just to stay connected to the community. I also host a yearly conference I'll tell you more about in a little bit. And you can see some of the clients I've worked with. I would say that I've had a varied experience in that I spent about a decade at Lehman Brothers, where our client base was a lot of Fortune 500 type companies. I would say over the last 12 or 13 years, I've been more middle market focused, where a lot of my clients are a lot of the mid-sized, more entrepreneurial companies. But because of my background working with the larger companies, oftentimes I can sort of bring two parties together, and you'll see through some of the representative transactions I've done that quite a bit. High level, just some of the things about our capabilities. As we mentioned, really what we do as investment bankers is help bring capital to companies, whether that's debt or equity, and we also facilitate acquisitions both on the sell side and buy side. Strong relationships, as I alluded to. Really, I've got relationships on the Fortune 500 side, as well as private equity, but then I also have a lot of relationships with mid-size as well as entrepreneurial startup type companies as well, and really in a basic way really work to sort of bring those parties together for transactions that make sense. Industry experience, again, I focus on this industry. work with a lot of companies that essentially would be members of LIFT and other types of organizations, and also spend a lot of time at various conferences. I'm actually at IMTS right now as we speak. And then, we're ultimately middle market focused in nature, but like many of my colleagues, did come from larger firms, so kind of bring world-class advice to small and mid-sized companies. On a more direct basis, this just shows kind of some of the work that I've done over the last 18 months. You can see that I've helped sell 3 businesses. One we hope to close over the next month. Also successfully priced an IPO for a client that's focused on the optics and photonics market. We also raised some growth equity for a collaborative robot company. And then we also issued a fairness opinion on a take private transaction. So that just gives you a sense of much of what we do. I think one thing, I did not do any buy side M&A or debt financing in the last 18 months, but certainly something I have done in the past. The next 2 slides just show you some of the types of transactions that I've worked on. I won't go through every single one, but I think what you'll see is there's a lot of different, I work with a lot of companies that do metal fabrication that can cover areas such as additive manufacturing, machining, sheet metal fabrication, other types of casting, metal injection molding. Also sector-wise, a lot of those same sectors, optics and photonics, aerospace, defense. I've also done a fair amount in specialty materials, which I know overlaps with a lot of the LIFT clientele. And you can also note here, as I alluded to, in many cases, my client might be a small to mid-sized company, but transacted with other companies, whether it be an Aerojet Rocketdyne, a Kaiser Aluminum, Precision Cast Parts, IPG Photonics, just to kind of give you a flavor of kind of bringing both sides to the table. The next page has some additional transactions, again, just kind of representative of some of the work I've done. This I wanted to highlight for you. We are going to have our 3rd annual Advanced Manufacturing Supply Chain Conference in February. We should be coming out with more details probably over the next week or 2. It's a great opportunity. We've had a format where we've brought about 40 companies into that to present, both in a presentation format as well as through panels. Some of the topics we've covered have been additive manufacturing, robotics and automation, as well as specialty materials, aerospace, defense manufacturing, medical manufacturing, and optics and photonics, as well as other sectors that we cover. The format has been one where we have sort of the presentations as well as the panels. And then we also have an opportunity for attendees to schedule one-on-one meetings, as well as we have cocktail receptions and other networking opportunities. So that's one to keep a lookout. I would also say that we're always looking for interesting companies to participate. So if anybody listening likes to participate in these types of events, I certainly feel free to reach out to me and inquire, and I can give you more details, or if you'd like to be a participant as well. Another thing that I do, again, around the industry focus, is publish a monthly report which tracks data on the manufacturing sector in terms of output and different trends, and also where companies are trading from a valuation standpoint, as well as deals in the market and upcoming events in the industry. So that's one that if anyone listening is not on my distribution list, if you want to reach out to me, I'm happy to add you. That's something we send out once a month that tracks a lot of data that you might find useful or interesting. Now getting to some of the trends we're seeing, and maybe I'll start first with kind of how I look at the sector. This is really kind of the companies that I spend time with in the industries. We look at the advanced manufacturing industry as really having sort of 4 pillars. capital equipment, manufacturers, advanced materials, and supply chain logistics. Oftentimes they interact. I probably do the most work, I would say, in the manufacturing and service center area. And you can see that, for lack of a better word, those are companies that provide, that either manufacture products or maybe even engineer and design products. And then, work across a lot of different industries. But again, I think probably spent the most time in aerospace, defense, as well as things like medical and optics and photonics and general industrial. One theme across a lot of the companies I work with is really sort of innovation, which is why it tends to be more things like aerospace, defense, and medical, because those industries are usually the first adopters of new technologies, whether it be additive or sort of new materials. Those are sectors that really, if there's a better way to make a product, those sectors tend to be willing to pay, just because things like being able to save a pound of weight on an airplane is of high value, just like if you could make some type of implant or something out of a stronger material that maybe is better. Again, that's a sector that really, those are just some of the sectors that tend to support a lot of the more advanced manufacturing. Also do a lot of work in the capital equipment side. I mentioned I raised money for a collaborative robot. I think that was last year. Also, have done work with other companies in additive manufacturing, as well as custom designed laser manufacturers. Another pillar is advanced materials. I've done a lot of work in that area as well. I helped a company sell themselves that did a high strength aluminum alloy that was both for additive as well as castings. And I've worked with other, other companies, including one that was a hybrid that was a manufacturer, as well as had a material research center that developed proprietary alloys. And then also another leg to that stool is the supply chain logistics, which really just kind of helps tie it together as well. So that's really how we or I look at the sector. In terms of some of the trends in the sector, frankly, this is a slide that I've had for, I think, 5 or 6 years. I think a lot of the trends have continued. I think they play off each other. You have things like new technologies, like such as additive, sector I've been around for about 10 years now. And, things like additive are really, helping to drive better products. Tied into that are things like robotics and automation, which that trend was always out there, but I think it's really accelerated with some of the challenges most companies are having now finding skilled labor. And I think also that's moving away from, not moving away, but I should say traditionally, as many of you probably know, there was industrial robots for a while, still a big part of the landscape geared towards things like automotive, where people are making, 1 million parts. Whereas now I think I see a lot of interesting developments with some of the more CNC applications, including collaborative robots, but even things like specific multi-grip technologies and other things that kind of can assist with that side of the market as well. And I think that's only going to accelerate. Mentioned lightweighting a little bit in terms of aerospace. I think there's some medical as well. Again, some of these technologies play off each other. Things like 3D printing, where you could make a lattice structure that maybe saves some weight. Internet of Things, where I think we're going to see this develop more and more, where there's more connectivity between a part moving across the supply chain and being able to track various data. Reshoring, nextshoring, again, something that I've seen over the last 10 years. I think COVID, the supply chain disruptions have really accelerated this. I think a lot of the manufacturing businesses that I've worked with have had record years recently, and I think a big part of that is that the supply chains have been disrupted, and those that can actually get product to end users or even OEMs in a reliable fashion have been able to really do well. And again, some of the other things you see here, new materials, again, just a different way to drive innovation. Another way to, 3D printing might allow you to produce a certain engineered part that does certain things. At the same time, if you could make a stronger material, that can also help facilitate that. And then you see some of the other trends here: mass customization, as well as faster product development cycles. In terms of, looking across, I kind of picked off some of the subsectors I've spent time on just to give you some of the trends here that I'm seeing. I think on the additive side, that's an area I've been around for a long time, at least as an advisor, starting with an IPO I worked on back in 2013, and then a lot of advisory assignments since then. I would say what I've witnessed is prototyping and indirect applications have become very widespread. I would say it's more the case than not the case when I go into a machining operation that they at least have a more plastic-based printer, and they use it to help sort of facilitate production. Has been an area that's had a lot of excitement. I would say, as someone who actually advised on a lot of metal service centers over the years, that I think it is not, in terms of the volumes, I think it is not accelerated as quickly as people have expected. I think there's still a relatively low volume of production produced parts using additive. But I do think that there's a number of factors which a lot of people are working on that'll really accelerate that. And that's things like faster machines, newer materials that are maybe either higher strength or maybe even more cost effective as the volumes increase. And then also things like software, which can do things like, for instance, for a while, people would cut up parts to test them, and if there's ways to do in situ monitoring and other types of areas. And then also, I've seen several different waves of consolidation in the industry. We seem to be having another one now. I know there's been a couple, Desktop Metal's been rolling up. SLM was recently acquired. So I think, there's things like some of these larger companies deciding to consolidate, throw more capital, as well as provide some credibility, is also another way to sort of accelerate some of the production path and some other areas like that. On the automation robotics side, again, I think that the big takeaway, in my opinion, is that industrial robots have been a big part of the landscape for a while. I think now we're going to see a new wave of more CNC-based sort of high-mix applications. We're seeing that on the collaborative robot side, and I think the next phase is for those to take to the next level, where you've got more customized grips and ways to use that technology to sort of further the adoption. And then specialty materials, again, to me, this is just another way to sort of skin the cat in terms of the inputs. If you can make better materials, stronger materials, it's another way to make superior product. And then just looking at some of the end markets, again, I've sort of picked these because these are the high-end end markets that actually use a lot of these new technologies, new materials, some of the things we talked about. Commercial aerospace took a big hit during COVID. I think it's the demand for product is starting to come back, very much so. Again, another sector that really is always looking for ways to make better parts, and as well as use better materials. So a real driver of a lot of the areas we talked about on the previous page. Also, I think clearly with what's going on in Ukraine, a renewed interest in military as well. And then on the medical side, again, another area that during COVID had a bit of a slowdown because of the elective surgeries. And I know that a lot of those companies that I worked with during COVID actually were really, demand was not there, but that again has come along very, very nicely. And again, another area where the cost to make a better implant or something is such a small part of the overall medical costs, as well as people wanting sort of the best, a sector that really helps drive a lot of the trends on the previous page. And then the optics and photonics market is one I've been spending some time having having priced an IPO for a company in the sector and then helping them look at potential targets. Optics and photonics is interesting because it is actually, as a sector, it really cuts across a lot of different parts. We estimated that it's about 11% of the economy, and again, plays across a lot of these other subsectors. And an area where there's been a lot of strong M&A action, as well as the valuations are actually very high. Now turning to some of the takeaways and observations. So on a macro level, 2021 was a record year by most, if not all, measures in terms of mergers and acquisitions. There was a number of things I think that led to that. I think first off, there was a lot of things put on hold during 2020. There was overall, just with the Fed and money in the market and just enthusiasm. I will say that there was a lot of private companies that also were worried that taxes were going to go up, which they didn't. That also led a lot of people to try to access the market. As we look at 2022, what's interesting is we're not as strong as we were last year, but the data says that the first half of 2021 is actually higher than 7 of the last 9 years. So it's still a very strong mergers and acquisitions environment. The stock market has probably taken a bigger hit, I would say. I'm sure everyone looking at their 401k or whatnot has noticed it, but the markets have pulled back. You can see that they're down between 12 and 26%, depending on which index you're looking at. In terms of some of the takeaways on the IPO, the SPAC, and the debt markets. So IPO volumes are down considerably. You'll see that later on. I would say they're really actually more on track for pre-pandemic levels, but last year was an unusual busy year. In terms of the SPAC market, and I guess for those who aren't familiar with what that means, a SPAC is an acronym for Special Purpose Acquisition Company. And essentially what it is that an investor will raise money through an IPO that's really kind of like a blind pool. So they may raise 200 million, it gets put into a trust, and then the idea is within a certain time period, usually 15 to 18 months, they need to find a company to buy. And then basically the company that they buy, it's a way for them to go public. This is a product that many years ago was kind of a very small part of the market. It ended up being very robust, I would say, over the last 2 years, last year in particular. That was actually tied into the mergers and acquisition market because a lot of companies were choosing to merge with a SPAC in order to go public as opposed to maybe sell themselves. You can see that last year there was about 231 billion of companies that essentially did that. This year it's 26 billion. So you can see that market has cooled off considerably. The debt markets, I would say, are still relatively strong. The interest rates are higher, but I would say that's still relatively healthy. The next area, I noticed that there's a typo that should say, instead of IPO, SPAC, and debt markets, it should say M&A markets. But as I mentioned, first half deal volume is off by about 18%. But if you look at some of the fundamentals, there's about 3.7 trillion of cash and equivalents held by S&P 500. And then there's also about 950, basically about $1 trillion of equity capital by US private equity firms, which they use debt to acquire businesses. So that's probably more around 2 trillion of buying power. I would say too that the valuations have been holding up. We have some data later on that'll show that companies on average are being valued at about 15 times EBITDA. Not sure if everyone's familiar with EBITDA, but that's earnings before interest, tax, and depreciation. Very common financial metric that the markets look at. It's kind of a proxy for cash flow, basically. And then I would say also that it's very sector driven. And I would say that Industry 4.0 and manufacturing is very, very strong. I would say that some of the end markets that are probably more negatively impacted are some of the more consumer facing type markets. But manufacturing has been holding up really well, as you'll see when we go through some statistics. And I know myself as a banker that covers that sector, I'm getting a lot of inbound calls from private equity and others that are really, eager to put more money to work in the sector. A couple more takeaways on this page, as I sort of alluded to. I think the Industry 4.0 verticals are in very strong demand. I think that especially when it comes to North America, we talked about a lot of the dislocation, and I think whether it's private equity buyers that are looking for strong industries with good growth profile as well as stability, there's a lot of interest on that side. I think on the strategic side, I alluded to the fact that these companies are still very well capitalized, and and I think also when you look at Industry 4.0, a lot of times the strategics are not necessarily the most innovative on their own. So if there's ways to pick up new technologies or new solutions, oftentimes buying is a lot easier than them trying to start up new areas. I saw this a lot. There was a period between, I would say, 14 and maybe 20, where I advised on a lot of metal additive manufacturing service centers, which were bought by large companies because they wanted to be able to use the technology, but they didn't quite have the expertise, and they found it a lot easier to just acquire those types of companies. And then I think in general, if you look at Industry 4.0, and frankly, that's a pretty broad term, it's still very fragmented, and there's a lot of consolidation opportunities, both, in particular, I think on the manufacturing side, you have some legacy family businesses where there's second or third generation, where there isn't a clear succession plan, or the children don't want to take it over. So you've got that sort of trend, as well as some of the more innovative companies that need to make a decision if they want to continue to grow, or if they end up selling to a larger company that appreciates what they've built. And then lastly on that point, I would say that we talked about the SPAC market. That market's become a lot more turbulent, and many companies that maybe a year ago would have used that as a way to maybe monetize are now not as eager to do that given the market dynamics, and may now be more interested in selling to a strategic or a private equity firm. On the financing side, I would say the public markets are probably going to be the most challenging area right now. But I would say, there's always room for really strong companies. I do think that for more, let's say, private market, minority equity opportunities, I think that market's very much open now. There's, I think a lot of people realize the opportunity there. I would also say more and more private equity firms are willing to do those types of transactions. So that is very much an open opportunity. I think the debt markets are relatively healthy. Interest rates are higher, but there's still liquidity there. And then one thing that we like to pride ourselves at Imperial is we're very creative, and so there's hybrid opportunities where you could have a mix of both. Turning back to the sector and some of the metrics, and I would say that this is actually a snapshot of some of the data that we put out in our monthly report that I mentioned. But looking at this, you can see that if you look at some of the major areas here, manufacturing, production, you can see it sort of hit low in 2020. It's ticked up. It's still at a very healthy level about above 100. Capacity also is at a high right now, as well as manufacturing sector output. So really strong data in terms of just output. You could see that the employee actually has been pretty steady. It is up. I know from a lot of the clients or companies that I know in the sector, I'd say that's one constant is the complaint not being able to find enough quality people. I would say that the 12826 you see, and in some ways, I think that there's a lot more automation in the system too. So I think that that number of employees is doing a lot more output, just given some of the automation and some of the other technologies they're utilizing to produce more goods. Looking across the performance of the advanced manufacturing sector, I really divide this into 5 areas, and the next page will actually give you more detail on those. And again, this is something that is in my monthly report with a lot more detail behind it, but look at it across advanced manufacturing, manufacturing technology, manufacturing materials, supply chain, and part suppliers. I think what you'll see is obviously that over this year, most of the sectors are down, although it looks like actually advanced manufacturing has actually managed to kind of hold steady, which doesn't surprise me. And then some of the others are down anywhere from 5 to 25%. I would say I believe one of the reasons why that might be is some of the manufacturing technology, the market. I think some of that includes some of the SPACs and some of the other areas where the markets have been probably punishing to more of the higher growth, even some of the companies maybe that don't have as much cash flow. However, if you look at it down below over the last 3 years, you can see that really there was a big uptick in early 21, and many of the sectors have kind of come back down, but they're still, most of them are at or above where they were about 3 years ago. So, I mean, I think that, you can look at this a lot of different ways, but there was a lot of money put into the system during COVID, which some think that that really caused there to be maybe a little bit of a more of a bounce than there otherwise would have been, and maybe things have normalized a bit more now. The next 2 pages have the subsectors that make up what I just outlined, and then the report I put out each month actually does have details on the companies and where they trade within these. But you can see Industry 4.0 is trading at about 2.2 times, and then you do have some outliers such as industrial software at 7.3 times. You can see aerospace defense 3.6, medical 3.2. Not surprising, you see something like auto OEMs at 0.8. But again, that just gives you kind of a snapshot of where the public markets are valuing a lot of these companies. And then again, here you see that on an EBITDA basis, which tracks in a similar way with an average of about 13.3 across the different sectors. The IPO market, which we alluded to, you can see that last year was a blowout year in this market. I would note that 2022 is actually the year-to-date June 30th. So if you double that to about 80 million, you can see that while the IPO market is dramatically off, it's actually more in line with really what it was kind of pre-pandemic. Next, I'll turn to kind of some of the observations in the advanced manufacturing M&A market. So from a global perspective, again, as I alluded to, last year was a record year. You can see both in terms of deals as well as volumes. But interestingly enough, if you look at this page, which is really the first half M&A over the last 9 years, you can see that 2022 is actually still a relatively strong market. And I can tell you that, we are very busy at Imperial working with companies across the sector, and I'm getting a lot of inbound calls from potential buyers just looking for more assets. So I would say we're still in a very strong and healthy M&A market. Also importantly, the valuations are holding up. You can see that 2021 was at a record at 16.3 times on an aggregate basis. We've fallen off a little bit to 15.7, but you can see on an historical basis, that's still, that's still kind of a high end of the market valuation. Now looking at some of the subsectors, I just highlighted some of the deals. I think on the additive side, again, I've been around this market. I think it's been pretty consistently an acquisitive market. I've seen different waves. And not surprisingly, the new wave seems to be that we are back to a lot of larger companies, whether it's a Nikon or a Desktop Metal, is actually consolidating a lot of the equipment makers, which I actually think is pretty healthy because as I alluded to, I think there's the technology is constantly getting better. It needs to get better to really drive more production. And I think the fact that these larger companies are going to maybe further professionalize, put more capital to work to sort of help that happen. Interestingly enough, on the robotics side, you're also seeing people like Amazon acquire iRobot, Hyundai, Boston Dynamics. So you're seeing a lot of larger companies that are not natural automation players, either users of the technology or people that see a benefit of bringing this in-house, acquire these businesses. Again, maybe they're not set up in a way to sort of start up a new operation organically. So they're finding that acquiring is a better way to get into this. It also saves them time if they want to get into the sector. It's a way to get into it immediately. Aerospace defense, that has, in my experience, always a very active sector from a lot of different angles. Most of the transactions listed are more strategic in nature, but I would say that there is a lot of private equity activity, especially some of the smaller and mid-sized type companies. Medical, another industry that's constantly consolidating. I think you have larger companies that consolidate to drive greater market share, but you also have a lot of innovative companies that the larger ones want to acquire rather than try to develop, new technologies or new products on their own. The optics and photonics market, again, a very hot sector right now. Valuations are very high. And, I think a lot of the companies are really trying to take, market share there where they can. And then especially materials, another sector where there's really there's a lot of large companies that are constantly trying to pick up new innovative product lines or technologies and see M&A is a good way to get there. Don't see it as much on this page, but that's also an area private equity has always liked to acquire chemical businesses, material businesses, see it as a great way to kind of roll up nice companies, if you will. And then lastly, I put in just some general industrial, which again, kind of covers a lot of different areas. We have a lot of strategic acquisitions, because I think the balance sheets are strong, and another area that private equity is usually very active at the small and mid-sized level. So sort of, I'll summarize some of my takeaways here. So I think that in terms of Industry 4.0, which again is pretty broad, we talked about it. I think it makes up manufacturers, it makes up capital equipment providers, specialty materials, as well as even some supply chain logistics. I think that the consolidation is just going to continue. Larger companies are going to look to pick up technology, services, and customers. I think you're going to have some small and mid-sized companies that may be private and maybe don't have a natural transition plan, so they're going to be looking to sell as well. Depending on, for those who are on the phone that are part of a business, it's something that you should be aware of, whether you decide to be a part of it or not. You're going to have both your competitors that may end up going with larger entities, maybe get better capitalized. You're frankly going to have it happen with a lot of your customers as well. And there may be, a merger where two companies come together, and maybe there's an incumbent that is with one of the sides, and they have to choose who's going to be their supplier or their service provider. I would say that to the extent that anyone on this call wishes to pursue kind of where they sit within that, we have extensive experience on both the sell side and buy side. As I alluded to, I personally have an active dialogue and relationships with over 1,000 strategic companies and financial buyers, and really, strive to really kind of bring people together for transactions that are mutually beneficial to both sides. We also have a long list of satisfied clients that when I get into discussions with potential clients, I'm always happy to offer up those references. And ultimately, I'm in this for the long term. I really, my reputation means everything. So I always want to give people the best advice and try to reach the best outcome. Sometimes the right answer is that it doesn't make sense to do a transaction, and want to really, help people get to the right outcome, even if that's not immediate today. We also can assist with growth equity and debt options. So I put my contact details here. I would say I would welcome anyone to reach out to me to introduce themselves. If you'd like to be on my monthly distribution, I'm happy to add you. Also, if you have any interest in participating in my conference in February, I'd love to hear from you as well. One page I'll quickly review and then open it up to questions is the next one, which is really, if you wonder exactly, what I do to help people, I would say at a high level, we do two things, I think, primarily. One is we help companies sell themselves. We can also help on the buy side, and we help people raise capital. This is a process that if anyone's interested, I could have a separate discussion that would be longer in length. I would say that our typical capital raising is somewhere in the 4-month range, and probably a sell side is probably 5 to 6 months. What we do is we do a lot of upfront preparation to really understand your company, both financially. We look at the market, we look at sort of key customers. So we really dig in upfront to do a lot of work to really understand exactly all the good things about the company, maybe some areas that could be improved. We put together marketing materials. It's not unusual for us to put together an 80-page PowerPoint on your particular company, outlining all the strengths and strategy and all the things that would be appealing to someone. We then will review kind of a customized buyers list that's subject to your approval. And then we'll go to market. We'll get people interested. We'll help conduct presentations, and then ultimately help negotiate a deal. There's a lot more specifics under each of those categories, but that's the type of work that we do. And then lastly, I put in the appendix here. This comes out of my monthly report as well. Some very specific 4.0 M&A deals. What's interesting is this is actually consistent with what I showed before, in that the average deal multiple is about 15.3, which is very similar to the aggregate number that I showed earlier. So with that, that's the presentation. And I don't know, Joe, if now is the time to open it up for questions. I guess we didn't leave a lot of time. I apologize for that.
No worries. Yeah. So if you want to go back to your contact slide, I encourage folks to reach out directly to Kevin with any questions. Or I know we don't have too much time, but if you wanted to go ahead and put some in the fire off a question, the Q&A area of the Zoom toolbar, we'd be happy to entertain those. But broadly, I mean, obviously, manufacturing is evolving. You mentioned additive and some of the software growth that is that we're seeing out there, but But one of the things I wanted to touch on was you had really shown the graph about the employment had stayed fairly steady over the last several years, even through the pandemic, and that one of the things that was they pointed to early on was the idea of reshoring. So can you talk to what are the driving forces there, and what can be done to encourage, I guess, more of that, because as we want to bring more of these jobs back to within the borders of the U.S. here.
Yeah, I mean, I think it comes from a lot of different angles, frankly. I mean, there's some real, I mean, for one thing, what I've observed is that the whole supply chain, let's say the backed up supply chain and the challenges is real. You hear that from so many people. And so there's been a lot of situations where let's say OEMs were trying to find the cheapest supplier, and maybe they even had an Asian supplier, and because they've somehow found a North American supplier that's more reliable, or maybe it's even a slightly different, like, technology. When I say technology, maybe a different way to make the product, and so they've sort of made those switches, and it feels to me like in many cases they're not necessarily going back. And then I think the technologies themselves really help drive better efficiency, such that if you look at why you would, let's say, get product from Asia, it's really driven by, well, it's cheaper, but then you have to do the offset for freight. Mm-hmm. But I think, I don't know if the employment levels are going to go up for manufacturing as much. And I say that because I think a lot of, I think the industry struggles with getting, let's say, new people to come in at the rate that maybe people are retiring, mm-hmm. which is why I think automation is just going to continue to be a bigger play. I've done some specific work with some of the collaborative robots, which are well suited for CNC machining. And I think that's an area that you're going to see a lot more automation. I mean, traditionally, it was kind of like the automotive would do these industrial robots. They had an installed base, and they basically were very good at making like 1 million parts. Mm-hmm. But I think automation, where it's more customized, where you can set something up to automate that makes a part for 6 hours, and then you can somehow change it up and then have them do something else for 4 hours. So I don't know if I specifically answered your question, but I do think the technology, and then I think also I think there is some sensitivities, and I don't know if government policy will help with this or give incentives or disincentives. I think people are concerned about the reliance that the U.S. has on let's say some unfriendly countries, right? I mean, you saw this CHIPS Act happen. So, I think there's a lot of different things. I think it's a combination of technology. There is a little bit of the national security thing, although again, I'm not sure how that comes into play. But yeah, those are sort of some of my thoughts. And frankly, I've been talking about reshoring like for almost 10 years, and I've kind of seen it happen. It's sort of incremental. I think COVID maybe has accelerated it and brought it more to the forefront, I guess.
Sure. I don't think I'd expect it to be flip a switch and all of a sudden all the jobs are back here, but incremental is probably where it would happen. And to your point, as technology advances and things are happening more digitally, there's distributed manufacturing that takes place, everyone doesn't have to be in one location, can be sourced throughout. Maybe that provides more flexibility and more opportunities for folks to come back here, especially if digital takes some of the other costs away that you mentioned in terms of even freight and things like that from around the globe. But I do want to be cognizant of folks' times. I know we're just at the top of the hour, so I would encourage people to reach out to Kevin directly with any additional questions or for a copy of the presentation. We will again post this on our website a little bit later today. Certainly you should see it overnight by tomorrow. If you don't see it later this afternoon. Kevin, thank you so much for your presentation today. Appreciate your partnership your membership here with Lyft and your willingness to join us. I encourage everyone to follow us at Lyft and join us for our next set of webinars as we get back into things here in the fall. And hope everyone has a great rest of the day. So Kevin, thank you so much. And we will see everyone next time.
Okay, thanks, Joe. Thanks
Thank
everybody
you.
for your time. Okay.
Yep.